So we're here with Dan Frost this morning from the Generate Investment team, and we're going to take a look at what happened in October. Starting with, Dan, the bond markets, they took a bit of a tumble in October. Can you tell us what happened there?
They did, Liz. Interest rates were up during the month, and that's not great news for bond market investors, because for bond interest rates to be up, their prices have to drop. Now, there are three reasons why interest rates were up during the month. First, early in the month, we had a survey of purchasing managers that suggested that the manufacturing sector was stronger than people had expected. Second, we had inflation that was running slightly hotter than people anticipated. So those two things suggest that maybe the Federal Reserve, the central bank in the United States, may have to continue to increase interest rates. And finally, we had the first signs that the increased supply of US government debt may actually have an impact on interest rates there.
What do you mean by the supply of bonds there?
Yeah, so this is really early days. But as you probably know, the US government is running massive government deficits. To the year to September, it was $1.7 trillion. Now, to put that into perspective, that's $5,000 per person in the United States. Now, to fund that government deficit, they need to issue debt. They do that with auctions. Now, in the October auction, demand was not as high as it has been previously, and so they had to pay slightly higher interest rates. Now, that started speculation that this wall of supply that we're seeing in US government debt was going to push up interest rates.
And so how did the rates drag down the market, the share market?
Yeah, so increased interest rates is not great news for share markets, because it's obviously a different option that you can invest in rather than the share markets. But there was also another couple of pieces of bad news that occurred during October. Firstly, we had the war in the Middle East, and secondly, we had the US reporting season. Now, the war in the Middle East is more of a humanitarian crisis rather than a financial issue. But markets don't like uncertainty, and at the moment we don't know how big this is going to become, and so it's sort of dragged down markets.
Yeah, and you mentioned reporting season. What's happening there?
Yeah, so we're sort of 2/3 of the way through reporting season at the end of October. This is where the companies report their results for the third quarter. If we just focus on the Magnificent Seven, this is the 7 largest growth stocks that have propelled the market over the last year. 6 of those 7 came out with results that were at best solid rather than magnificent. Now, when the market's expecting magnificent, solid is not good enough, and so 6 of those 7 saw their share prices decline when they reported earnings, pushing down the prices in the market.
And so what about local markets? What's been happening in New Zealand?
Yeah, so back in my home territory, we had a few companies reporting at their annual shareholder meetings, and so these occur a couple of months after they report their end of year results. And what's interesting at these meetings is they'll give you an update as to how they're seeing conditions. 2 companies in particular that I'd like to highlight is Port Tauranga, New Zealand's largest port, and Freightways, a large parcel delivery company. Both of these companies talked about how the market conditions were impacting demand for their services, and they adjusted down people's expectations for the current financial year. So in between August, when they reported the results, and October, we saw a deterioration in economic conditions. Now, these 2 stocks are considered bellwethers, and so when they report conditions have started to deteriorate, people start to question, is it just the election and just a blip, or has the increased interest rates from the Reserve Bank going to cause another slowdown in economic activity?
So a tough month in October.
Yeah, tough month. But as you're probably aware, Liz, we've enjoyed quite a strong year to date. Global share markets are up almost 10%, and then the weak New Zealand dollar has also pushed those returns higher for New Zealand investors. Bond market investors have also enjoyed positive returns. It's only been the New Zealand shares that have actually had a negative return year to date. They've had such a strong period compared to their peers over the last couple of years. It's sort of almost expected that they're going to have a weaker period. And I guess I should add also that we're a week into November. It's really early days, but the market's actually recovered all the losses as well. So things aren't looking too bad.
That's good to hear. Thanks so much, Dan.